Good evening, all. I'm Epstein, and here we are with your SPDR-ETF stock market wrap-up on a big up day for a Monday. I mean, a strong day for this October 30th, 2023. More green than red by a lot on everywhere that you look. I can understand TLT, BND not wanting to do much. Remember, you've got three central bankers this week coming out. You've got the Bank of Japan tomorrow morning. Then we have the Federal Reserve coming out on Wednesday. Then we have the Bank of England. If that's not enough, on Wednesday morning, you're going to also get the quarterly refunding from the U.S. Treasury. Whisper numbers about $114 billion. That's going to keep a lot of pressure on the market still. Then we get another set of numbers with the JOLTS data in jobs, and then the jobs report on Friday. We have a lot of data. So getting a nice rally now, is it anything more than a relief rally? I don't know. CNBC keeps talking up Monday's big update typically. Yeah, but they don't say the Tuesday reversals are also another famous verb that came out of who? Yale Hirsch of Stock Trader Almanac. So pay attention to that, Tuesday reversals, and that's very common. We have the auto unions having reached their agreement. There's just so much that's going on. So all three have accepted the terms, and they're very inflationary. I wonder if anybody, the reporters, will have the guts to ask the Fed what they think of that, because that's wage inflation every which way you look at it. We have the Screen Actors Guild trying to get their deal done. President Biden, via an executive order, is setting rules for AI. At least it's something, but remember, whoever's the next president, and I'm not convinced it'll be him, they can remove that just by stripping it away. All right, but it's a beginning. NXE, we haven't talked about this. This is next-gen energy. Uranium's starting to get big plays. I didn't want to cover it for the longest time because it sank into the toilet. And now what's happening is the market's gradually coming alive, is the market's realizing that, number one, over time we have to get rid of the fossil fuels. That's a known. But the expense of wind and solar energy is still there. And people are starting again to say, you know, maybe we were wrong on nuclear energy. Maybe these smaller plants can make something work. We're seeing the use in all these ships now. No problems there. When, you know, Tokyo had the huge issue, and it shut everything down. But it was also Tokyo, you know, and when I say Tokyo, Japan. The big issue there, of course, is they're an island that's very prone to earthquakes. As much as they tried to protect everything, it still failed. The water's now going back into the ocean. The fish are being ate by the Japanese people. They're being rejected by China. We'll see if that soon changes or not as the studies are done on everything. But it's a decade, so it's a long time ago that this all happened. Now let's see what the markets want to do with it. But I do think you have to start looking at this. And I looked at the market and I said, you know, it seems to me that you have finished your break lows. Let's call it the $4 area for nothing better to say. You probably got a little rich when you got up here over to 640, came back into the 540 range. And I think you're trying to carve out, I think it looks that way on the chart, a bottom. You had the big rally. You pulled back to the 18-day average of closes. You're trying to hold that right now. You're staying within the Bollinger Bands. You stuck your neck out once, and I always laugh when that happens because I tell traders, you're going to get hurt if you buy over Bollinger Bands more times than not. The market, if it gets over, often will pull back in because 95% of the time, the market will trade within these bands. And that is so darn important. And you put it with momentum and you get a picture. And when you look at momentum, it's sort of flat. So I'm not seeing it want to crash. I'm seeing the market trying to hold the 569. It's got a bit more work, but it's worth starting to look at. Rivian, all the carboys are in trouble. And I'm even hearing that Elon Musk thinks that even his stock can be dropping back a bit here. Wouldn't surprise him. Interest rates high. What are they going to do? Have you really milked a lot of the EV market, the early buyers? Maybe. We in America aren't like China that really gets behind the cars and helps the new automakers in a major way. And Finland and other countries do the same. We're there, but not at the pace you think. And most of the automakers you watch, they're going to slow down what they're doing, including the big boy, Volkswagen. You watch that, you're going to see I'm probably right on that. In UGA, the gasoline fund, the big battle's right here. If this market now takes out 63.05, and guess what? It just did it late in the day today. I didn't even notice that. So you've now got the trend down. I want to get rid of these up arrows. I didn't see that. Lower highs, lower lows, momentum down. I think the pros are going to sell right into this with stops over 65.28, looking to see can you get back to the 60.86 level. That's what I'm guessing is going to happen. In the financial services, are you going to embed here? Embedding? Okay. Both numbers under 20. You'd certainly had that right through here. Let's see if I can get that to come back now. Generally does when I do it right afterwards. There we go. All right, so let's take a look. This is today. Yesterday, both numbers under 20, and the day before. Not the day before. So today they embedded. If you've taken my course, you understand what that means. You've locked into downside momentum. So until the red line's over 21, I'm expecting to see the pros reach for this market on the upside, try to sell into it. Now, do you want to do it right in front of these three central banks and the quarterly refunding needs of the U.S. Treasury? That's going to be the big question. But as a chartist, in the bear camp and looks still pretty good and bearish. In the industrial sector, I have an embedded reading. So getting a rally today of 1.25% doesn't change the picture. You've got to close that red line over 21. Otherwise, what I think is going to happen, and I do think it'll happen, you get continuation of this rally. I think the pros are going to try to sell it tomorrow. In the AI3, well, you're caught in sideways action. There is no trend. You have come all the way down in this market back into this 23.55 to create a bottom. That's what it's acting more and more like. Now, could it be a top for another level down? I'm not going to rule that out, but don't see it just yet. It could be there. Momentum's down, trend is down. You'd have to start busting out of the lower Bollinger Band. It hasn't been able to do it so far. In RSPD, the consumer discretionary, I think the consumer's burned out. I am still bearish. I think the good hard rallies are going to get sold by the market until they get a reason why the consumer isn't. I'm looking at 24 to 28% interest rates across the board. I'm looking at a consumer that looks at inflation going up on everything. Everything. Did you see how much Halloween candy went up this year? 14%, and we had a double digit last year. So the candy prices keep going up. I just mentioned it because everything seems to be going up. Then we get to the XHB. And as you can see, you have the embedded reading. That's bearish. The market coming down with sideways action, but the swing line is up. In order to get a failure in this market, I don't see it right here other than off of this. If you were to take out, I'm guessing, the lows of Friday, that would be the catalyst that might drop you to 68.06. And that number, let's see if I can get this to come down there. I don't know if it'll let me do it. Fighting with me today, all this. There we go. So that number would be 69.44. If that's taken out, I can make an argument for it. If you rally more until you lose the embedded reading, you can get up all the way into these areas right through here probably. But if you lose the reading, who knows? Up here is where I look for the resistance regardless, 73.09. In XLE, now when you get down to the 100, 200-day average, I don't think that you want to do much. The energy sector, I think it's getting quickly sold out. I'd be a bit careful on it for a bounce. Then we get to SLV. It did this before. It got itself up to the 200 and the 100-day average, the green and the gray, failed against the upper Bollinger Band. It rallied today right into the number. So will that be enough on its own to stop the rally? You are not trending. You have a pattern of a higher high, lower low. Interesting, but nothing really going there. In the copper market, it tried this morning to act so darn good, especially the futures markets, and by day's end, it just kept fading. What what we're seeing is the market is recognizing the fact that, number one, China has gone through a lot of their copper stocks. They didn't intentionally buy. They held back as their economy was slow, and now they're depleting them. So sooner rather than later, they're going to start buying it because they are seeing industrial production come up. So I think you're carving out a trading bottom. You're not embedded. You're oversold. That's what I think you're trying to do. It's not a trend trade. TLT, higher lows, higher highs. You have a market that is getting I call it a bear market rally. Momentum is sort of flat. You're still under the 18-day average, and you've got just too much data to be a hero in that. Do you really want to go through the Treasury quarterly refunding number to hear what they're going to do, and then 3 central banks, especially us, on Wednesday? I'll let somebody else want to do that. And the same would be in currency trade. This is probably a good time not to be putting on brand new markets that can get caught. Let's call those the FXE. Let's call that the UUP. I think you got to stay away from those temporarily. And as you can see, you've got a higher high, you come back down, not a lot going there. So I think you want to be careful right now and not get caught up in the emotion. And I want to use that word very carefully, the emotion of the trading. I've had to put out today 8 to 10 recommendations in the market, in the SPDR-ETF. So if you're a serious trader with that, each morning, Monday through Friday, I start recording, and these are just some of what I cover. I'm always reviewing it and changing it. But I put out a lot of different recommendations, stop orders with it, objectives with it, why the trade's coming about. We look at daily and weekly charts, and everything is chart-based. None of it is fundamental-based. So if you're a chartist looking for another chartist, why does he see what he does? I explain it. I bring up the study, show you why I'm showing them to do that. Well, then we'd love for you to join us. So I'll give you the fundamentals if there's earnings and so on, like you're getting out of a number of companies right now. But primarily, I love it off the charts. You can go to IRAPstein.com. You can go to the word research. That's where this all is. SPDR-ETF video. Give it a try. I think you'll like what you see. I'm Ira Epstein. I will see you all tomorrow morning. You have a great evening.